Hello and welcome everyone. In this session, we're going to talk about the self-assessment. So we're going to understand few things, especially when a person need to submit the tax return and what is the criteria, what is the basic understanding for the self-assessment tax return, and that will give us the idea for the next session. So first we're going to look at all the details for a self-employed person, how to apply and when need to apply, and after that we're going to look at some example to understand it better way. So let's try to understand. We are following the tax year 23 and 24. So the first thing we can see here is who must send a tax return. You must send a tax return if in the last tax year 6 April to 5th April. Remember that the HMRC have a tax year that is 6th April to 5th April. So every year, every person who is self-employed or they need to submit the self-assessment tax return, they have to make the calculation between this period. So they will open their cash book or their bank statement and to check how much was the income and expense between 6 April 2023 to 5th April 2024. Any of the following apply. So if this condition apply to them, they have to submit a tax return. You are self-employed as a sole trader and earn more than 1,000. Now if your income is less than £1,000, you don't have to submit a tax return because this income will be exempted by the allowance. So if it is more than 1,000, you have to tell the HMRC how much is the income and from where you get this income. If we're in a partnership business, if you are in the partnership business, if you had a total taxable income of more than 100,000, doesn't matter how the income end up with. If your income is more than 100,000, you have to tell the HMRC. The reason is there is some adjustment we need to make if someone's income is more than 100,000. For example, the maximum threshold for the personal allowance is 100,000. So if someone earned more than 100,000 pounds, his personal allowance will be reduced. For every £2, £1 will be reduced. You had to pay high income child benefit charge. So if your income is more than 50,000, you need to pay some child benefit. You have to do a separate calculation for that, so you need to look at that as well. You may also need to send a tax return if you have any untaxed income such as COVID grant, money from renting out a property, tips and commission, income from savings, investment and the dividend, and the foreign income. So if you have any of this income, you still need to submit the tax return to HMRC. The basic understanding here is, for any reason, if HMRC don't know your income, for example, when you work as employee, your employer submit your income detail to HMRC every month. But if you work for yourself, or if you have a property, or if you receive a dividend, HMRC have no idea how much you are receiving every month or every year. So it is your responsibility to tell the HMRC from 6th April to 5th April this year I have received this amount, and the tax will be calculated based on that amount. So the next option we have here, register for self-assessment. Very simple. If you believe one of the conditions is fulfilled above for you or for your client, then you have to register to HMRC. Normally you have to register before 5th of October the following year. You need to tell the HMRC, I have some income and I want to submit a tax return, because HMRC might allow you option to do the paper return and the online. Normally the paper return deadline is 31st of October and the submission deadline for online is 31st of January. But HMRC can extend the time, depends when you get the notice. Normal timing is October for the paper form and 31st of January for the online submission. The way we register as a self-employed or sole trader the process is same. All you have to do, you have to go to the Gov website and you have to apply for a UTR number, that is unique tax reference number. Either you are a self-employed or either you are a sole trader, you will receive the UTR number. The difference between the sole trader and the self-employed is when you are a sole trader, you treat this one as a business. For example, you have 5 cars and this 5 cars you rent it out, or you have 5 property, you rent it out, so you're receiving some income that will be treated as a sole trader. On the other hand, if you have only 1 car and if you drive yourself, that will be treated as a self-employed. The next section, sometimes HMRC can ask you to complete some extra section or extra declaration. So here is some detail. If you're an employee or company director, you maybe have to complete the SA102 supplementary. If you're a self-employed, 103S. If you are a business partnership, SA104S. This is basically for additional information, but most of the time you don't need it. For example, if you receive some benefit from your employment, or sometimes some information that cannot be completed in the main form or on the main tax return, then you have to complete these extra pages or supplementary pages. Otherwise, you really don't need it. The next thing we have here, what information do I need to complete my tax return? Your tax return for any tax year must contain detail of all your taxable income, and again, here are some typical things you might need to know. Now, the taxable income means the income you are liable to pay the tax. For example, the property income, for example, the saving income, for example, the dividend. This sort of income is a taxable income. Normally, if you work as an employee, you already pay the tax at source. Normally, you pay the full amount of tax while you are working. So normally, there is no tax on the PAYE calculation. So how much is your employment income? At the end of the day, if you input how much tax you already paid, it will be automatically adjusted if you paid the right amount of tax with the right tax code. So here we are looking at, you need detail of self-employment income and expense to work out your trading profit or loss for the year. So how much money you have earned from 6th April to 5th April, you have to have a record for that, and also the expense. Normally, if you work as a self-employed, there is a lot of expense it could be allowable. For example, if you use a car, the petrol, for example, the traveling costs, for example, for your uniform, for example, for your lunch, for example, for your mobile phone, this sort of expense could be allowable for you. So you need to see what expense is allowable. So you need to take it out, income minus expense. The next one we have here, detail of the property income and expense. If you have a property, then you need to look at how much was the income and how much was the expense. Normally the expense include, for example, the agency fee or any repair and maintenance. So this sort of expense you need to deduct. So we can actually show you how is it work in the next section. The next thing we're going to look at, employment pension information, including the P60, P11D and P45 from any jobs you had. Now it is possible you might have more than one job during the 6th April to 5th April, so you need all this information, number one. Number two, if you receive any taxable benefit from your employer, for example, if the employer give you a car, if the employer give you a house to live, or any other benefit, for example, a mobile phone or any electronic device, you have to have this information. Also, if you left a job, you should have your P45. If you have a client, you should ask this information from the client. Interest certificate from the bank or building societies. So if you have some money on the ISA or any income that coming from the saving source, then you have to have a record for that. You need this information to calculate your savings income. Detail of pension contribution made to relief at source scheme. If there is any pension contribution, it could be PPC or it could be gift aid relief. So you need this information because it will help you to extend your basic band. Detail of any chargeable gain made during the year. So if you made a disposal or if you sell something, capital asset during the year, and if you make a profit for that, you have to have a record for that in order to calculate the capital gain tax. All right, now we're going to look at the band. So for the tax year 2023 and 4, the personal allowance still remain 12,570. That means up to 12,570 we will not pay any tax. The next one, we have a little bit threshold. So we have a band personal allowance up to 12,570, no tax, tax is 0 rated. Basic rate start from 12,571 to 50,270. So between this number 12,571 to 50,270 we pay tax 20%. It could be your non-savings income, it could be your savings, or it could be dividend. So between this number we only pay 20% tax. Higher rate, more than 50,271 to 125,140, we pay 40% tax, regardless either from savings, either from non-savings. And if someone's income is more than 125,140 per year, the tax rate is 45%. Then we have some allowance. Based on the limit of the income, the individual can have allowance. For example, if you are a basic rate taxpayer, then the savings allowance is 1,000. That means how much you receive from your saving income. For example, if you receive £2,000 as an interest income, so first 1,000 will be exempted or 0 rated. You don't pay any tax if you are a basic rate taxpayer. If you are a higher rate taxpayer, that means if your income is more than 37,700, then you only get 500 allowance. If you are an additional rate taxpayer, for example, if your income is more than 125, then you don't get any allowance, you get 0 only. Dividend allowance is fixed, so the first 1,000 is free, you don't pay any tax, regardless your income. For the tax year 23-24, only £1,000 on dividend, you don't pay any tax, it is exempted. It is not considerable how much is your income. Dividend 1,000 will be always exempted, so 0 rated. And rest of the dividend, if you are a basic rate taxpayer, then it will be 8.75%. If you are a high rate taxpayer, it is 33.75%. And if you are an additional rate taxpayer, it is 39.35%. As a self-employed, also they're liable to pay class 2 and class 4 national insurance contribution. So if you are a self-employed and if your profit is more than 12,570 or more than the personal allowance, you usually pay the class 2 and the class 4 national insurance. Class 2 national insurance is fixed, that is £3.45 a week. It depends how many weeks you make the operation, you have to multiply with that number of weeks. For example, if you started your business middle of the year, you just pay the national insurance for class 2 only for the 6 months. Class 4 is the percentage the profit you make between 12,570 and 50,270, and the difference you pay 9% class 4 national insurance if your profit is more than 50,270. So anything excess you just pay 2%. For example, if your income is 60,000, if your profit is 60,000, so 60 minus 50,270, you have to multiply with 2% to find it out how much is the class 4 national insurance contribution. And you have to pay this one at the same time when you pay your self-assessment tax. How to pay the tax? You can pay the same way, the way we do the self-assessment. Alright, so this is all the information you need to know about your self-assessment tax return. Of course, when you will talk about the details, some example, how we're going to calculate the tax based on their different level of income, we will show you more in detail. Also, you're going to look at some example for self-employed, some example for sole trader, some example for the property business, so that we understand what type of expense is allowable for the property and for the self-employed and for the sole trader, to make our understanding more clear. And later on, we're going to show all this calculation on the software to see how to prepare the tax return and how to submit to HMRC. All of this thing we're going to do in this session, of course, and we'll have few parts. So hopefully that will make your understanding very clear for the self-employed income and expense. Thank you very much.